Good morning, folks. Good morning, Sankar.
Hey everyone,
Prediction
thanks for joining
is
on a
the
Saturday morning.
is the audio and video
Yeah,
all right? Because I'm on a slower connection now.
yeah, it's fine. I can hear you. I can see you. Uh, Viewers, can you please send in a yes if you can see us and hear us properly? And also, please do put in your introduction, your name, and where you're from.
Hi, Sachin. Hi, Gaurav. Hi, Ganesh. Hi, Mac. I'm sorry, we are on a backup internet right now, so hopefully this will work. Hi, Amit. Hi, Shailesh. Hi, Tarini.
We had folks from various countries last time, so we have.
Yes, I can see Venki from UK.
Okay, nice.
Udit, hi, good morning. Kirov, Manish, Bhanu, Hunter from Hyderabad. Medhavi, good morning from Dubai. Gaurav from Dubai. Sachin from USA. Wow, that's pretty late for you. So we will just wait for another minute or so and then we'll start off. Good morning, Ganesh. Hi, Mohan from Chennai. Ganesh from Nagore. Good morning, Yatharth. Okay, so I think,
Yeah,
hi, Mayank. Hi, Dr. Mohanta. Let's start now. So, good morning, folks. Thank you so much for joining on this Saturday morning. So, as we started out a few months back, we will hold a monthly meet of this kind every month, end of the month, hopefully either the last Saturday or the first Saturday of the month. And essentially to discuss what has happened in the market, how the market is looking, have some insights about how some sectors are performing, how some of our strategies are performing, uh, and any specific discussion that we may have, and then we will open it up for Q&A. So last 20-25 minutes can be Q&A. We'll keep it to 1 hour, so 11 to 12, and we'll take up all your questions. You can drop the questions in the comment box, and we'll take them one by one. In case we are not able to take all of them, you can send them on email, and we'll cover that. So the start of the session, basically the question is the mojo back? So it does seem like the momentum is coming back, and my usual you can say hack for this to know if the mojo is back is when we have no cash left in any strategy. So this rebalance which is going out this weekend is the first one after many quarters where no strategy in the absolute momentum world has any cash left. So everything is getting deployed. And before I start off, let me get this out of the way. We are running a special campaign for 2 days on MI20 and MI35 for today and tomorrow, and you can use this offer code WIAPR23 to get some discounts here. So now, Nifty, if we look at the very long-term chart, and this is a logarithmic chart, you can see that Nifty has been in the red only so many number of times. I mean, you can actually count them. It's not more than 6 or 7. So essentially, our markets are by default a growth market, at least for the next few decades. That's what everybody agrees upon. And given that fact, the only thing that we need to avoid is to not stay in stocks that do not move or are going down. So as long as the default setting for the general market is upwards, we only need to stay with stocks that are moving upwards along with the market. So that is the sort of basic premise that I always say, that that should be your core of your approach to the market. That you just don't want to be stuck, or don't want to be stuck in a downward trend. You basically want to remain in the strongest stocks, remain with the upward trending stocks, and rest the market will take care of itself. So you don't have to really be a rocket scientist to do this. Now, what has happened now is that the market has, which had started falling from 1st of December 22, went down till March end almost. This is, I think, the candle for 31st March. And we lost about 2,000 points, going from 18,800 odd to about 16,800 odd in this 4 months. What has happened in the last 1 month is that the market has very, very smartly sprung back from 16,800 or 17,000, if you may say, to about 18,000. We closed yesterday at 18,048. What this has done is it has almost recovered more than half of the damage done in 4 months within 1 month. So, if you see the rate of fall and the rate of rise, that itself is telling you a story that usually in bear markets, which are long term structural bear markets, you will find that the lower lows are made after each fall. Whereas here, I'll show you a longer chart. We have not broken down from June 22 lows. So June 22 there was a low around 15,900 or something like that, and then we made a higher bottom in October 22, and now we've made a higher bottom in March 23. So we are now in a series of higher highs and higher lows since June. And once 18,800 is taken off, we are rest assured that the trend has been established upwards. Here also you can see within the smaller time frame of, daily or weekly patterns. Here also you can see within this shorter intermediate leg, you were looking at lower highs, lower highs, lower highs, and then this leg has broken out above this previous high. So that gives us the first indication that this intermediate trend is changing. And then we made a higher high than the previous high and broke above this high. So that establishes that the intermediate trend is up. Now the long-term trend will be established as up above 18,800. Additionally, if you see, and I should have drawn this chart earlier, this intermediate downtrend has been broken. In fact, Nifty came back and retested the trend line. If you just imagine that trend line to be here, it came back, retested it, and has taken support and gone up. Also, a inverted HNS head and shoulders pattern. Those who may not be charting, this is a technical pattern which has a good probability of success, although no technical pattern has any absolute guaranteed success. But you can see a head, a shoulder, a head, and a shoulder here with a neckline around 17,800, a head top at 16,800. So the natural target for this formation is 18,800, which is also coincides with our top of the market. So that setup seems to be in place, where we are targeting 18,800 as the logical end of this pattern target, as well as a major resistance to the market at the previous high of the day, high of the previous year. Now we can also look at how and when this pattern will be broken down or negated. So just like as I said, there is no absolute surety, because we are living in a very uncertain world. And every day, every few hours, we hear a report about the looming recession in the West. And although India is somewhat insulated from it, but as they say, US is the mother market of the world, and the mother market goes into some sort of a recessionary trend, and we will face some demand issues from that market that will definitely impact a lot of export oriented services from India, which is the majority part of our trade with the US. So a lot of IT, and IT is already reflecting that actually. So IT stocks, IT index, if you see, is probably one of the weakest index out there right now amongst all sectors. Anyhow, so this pattern would get severely negated below 17, this 580 or whatever this number is. If this was to break down below this, that would be the first indication that this upward intermediate leg up is failing. And of course, if we break down below 16800, it will be a confirmation that we are going low. And in fact, you will see there is a bigger head and shoulders pattern with a potential shoulder here. So if the inevitable hits the fan, then you're seeing that this leg could form the right shoulder of this head and shoulders pattern, and then we are in for a very very long winter. So there I have given you two setups to look for, and how and when each of these setups will come in. Leg is very strongly on the upward trend, and my gut feel is that we are looking at an 18800 kind of a thing within matter of weeks and maybe a couple of months at best. So this is the setup for the Nifty. Now, if we look at some of the sub segments of the market, let's look at small cap index. So this is small cap 250 index. Now, small cap 250 index, when it bottomed out of COVID at around 2900, from there it rallied till January 2022. So almost you can say 7 quarters of a rally. The last 2 quarters were not so much of a rally, but still the top was made in January or February 22. And this is the kind of move which is once in a lifetime kind of a move. This won't come every now and then. Nevertheless, this move of almost 3x or more, actually 2900 going towards 10,200 odd, uh, has is likely in every scenario that you see in the last many decades, that if this kind of very little bit similar move has happened ever, it will take a long time for the market to digest it. So this sideways move that has happened from 2022 January till about now, almost a year and a half now in the making, is a sort of a market is digesting these gains that had come around. So whatever had gone up, if it was not worth going up as much, that has come down, and you've seen the average NSE stock is down maybe like 35 to 40%. But what has held up and is still holding up, it means that there was due worth in that particular stock or sector, and that is holding up. So what is happening here is that it is just consolidation happening in a more of a sideways trend. And once this consolidation is over, and this next leg, whenever it starts, it may be now, it may be 1 quarter, it may be next month, we will see a very very I would say ferocious rally in small caps again. That is the past experience also from small caps and mid caps, and that should happen this time again. Mid caps, if you take a very long term view, mid caps have had a very long bouts of rallies and short bouts of corrections. So long bout of rally here, a short correction here, then a good rally here, some correction, then a good rally here, some correction. And we are essentially this time, if you see, out of the last 2 decades, very few times you would have seen that the correction is in a lateral mode. So it's a horizontal correction. It did not from 10,000 to 31,000. The mid cap index went, but it did not come to 20,000 back. Which could have been an expectation after this kind of a rally, after this sort of a rally, after this sort of a rally. You would expect that 30-40% of the gains would be given up after a rally like this, but it has maintained it laterally and is almost rearing to go up. So as soon as this top is taken out, I would presume that a very ferocious kind of a rally can presume here as well. And this is the main reason why I feel that this rally will come around. This is the dollar index. And the dollar index essentially is somewhat a trigger for emerging markets, for precious metals, where whenever the dollar index is coming down, you will see there is a marked liquidity flow towards emerging markets, marked liquidity flow into precious metals. And that is what you can see even here, that from October onwards, uh, Nifty was in fine fettle. But then post December, Nifty remained in a sort of a downward trend till somewhere in March. Of course, DXY started to come off a little before Nifty, but as soon as this critical level in dollar index is broken, you will see that already the fund flow that has started from the FIIs will have a lot more impetus in it, and we will see a lot more flows coming to India, and that will definitely give us that next fillip. So if I were to sum up the last 1 month, this is the last 1 month performance of the various index and the various strategies. Uh, so we have two different kinds of strategies. One is absolute momentum strategy, where strategies go to cash, and then once the market builds momentum, it comes back and reallocates to stocks in the new wave up. And there are strategies which are rotational in nature, which never go to cash and will rotate to the strongest part of the markets at that time also. So what you're seeing here is that MI20 and MI35, which are these rotational strategies, have done really well in this last 1 month, because they were able to capture the early movers out of the bottom as it is happening, and others will catch up over time. So while both absolute and relative momentum have their own advantages and disadvantages, the advantage in relative momentum remains that you are always invested, and of course you will have more higher drawdowns also, but you will be the first ones of the start mark whenever the market starts to rally. And if the market rally long enough, then absolute momentum usually will take over at a later stage. So this is something that you could look at in terms of how to decide how to allocate to various strategies. So coming back to the sectoral trends, uh, I wanted to share with you few of the trends of different sectors which are looking good to me. Of course, these are discretionary, analysis, which really is not an input into any of our weekend strategies. But the conceptually, I mean, what I'm showing you is what is happening automatically in those strategies. So I'm not looking at the real estate chart and saying, okay, real estate is looking good to me, so let me pick real estate stocks in my portfolio. That is not happening. But the strategies themselves are able to pick stocks which are in relative strength versus others, and hence these two analysis will match over time. So this is the real estate index, the Nifty real estate reality index, and we can see here that it is now above the 200 DMA and also above a crucial resistance here, and starting to pick up. So if I were to go back and look at a very long-term chart, this is almost like a flagpole pattern, and it is very likely that this will lead the market towards new highs on this on the real estate index. And we are seeing anecdotal evidence also on this. So always when you are trying to analyze sectors, if you are doing discretionary investing also, is that on ground anecdotal evidence is there that real estate is picking up, rentals are running, gushing forward. And especially in my area in NCR, we have been seeing people queuing up for buying real estate. So there is a buzz in the real estate market. And also because I think we are living in a world where real assets and more and more as we go into this inflationary world, and central banks are having to continuously pump money to keep the system afloat, more and more assets will get inflated. So what we are seeing, as I mentioned this morning also on Twitter, was we are seeing this K-shaped recovery, where people who have assets are seeing a lot of wealth generation because all asset classes are going up, and those unfortunately without assets are having to bear the brunt because they are unable to participate in this gush of money that is coming out of nowhere actually. So you can keep printing money and everything goes up. So if you have any asset, it will go up. If you don't have any asset, you basically will not get that wealth effect. So this is the unfortunate part if we see from a economics point of view. But what this is going to drive people is to not keep money in cash, not have maybe this trend of rent to buy is also picking up. And COVID also has given a huge fillip to real estate in terms of people wanting bigger houses or working from home, etc., etc. So coming back to this sectoral index, so autos is something that has been stuck for some time in a range, but it again is a very very small range of about 10% that we have been playing in. And once it is also actually creating a head and shoulders pattern here. And if once it does break out of this range, we are expecting the autos will also take off. So in many of the strategies you can see TVS Motors, you could see Mahindra, Bajaj Auto, uh, Aisha Motors was there but is not there now, and in some small caps also some auto component names have started to appear in the last many months. So this is certainly a sector that is looking good. PSU banks have been a blast. You can see here June 22, PSU banking index was 2300. It went all the way to 4600, so doubled within a span of 6 months, 6.5 months. And what this January to or December to March correction has done is, after this huge rally of 100%, it has given a very good corrective phase to these PSU banks, and now the rally has taken off again. It's a beautiful flagpole pattern, and I have no doubt that this is going towards its all-time high and much higher. And this correlated with what we are seeing on ground is, and here also you can see a HNS pattern is there. Also you can see here on ground is that balance sheets getting cleaned up very very quickly, lower NPAs, huge government fillip towards PSU bank. So if you compare PSU bank index versus private bank index, you will find that since last year there is a huge diversion between the two. While private banks have also gone up, but nowhere near the pace at which PSU bank have done well. And if we go back and look at a decadal chart of PSU banks, and I wish I had put this here, but if you will go back and see, we have been stuck in a range in PSU banks for more than a decade. And once we do get out, I think the all-time high is 4800 or some 5000 or nearby. Is once we do get out of that all-time high, I think PSU banks could be the sector for 2023 and beyond. FMCG, A sector which I always feel from a valuation perspective when people talk about price earnings and all that, very very expensive, but as has been the case for the past decade, FMCG continues to outrun anybody's expectation. So despite volume no growth as reported by levers, despite all the hardships that have been coming through on import front on oil, etc., FMCG runs continuously in India, and it's very difficult to stop this juggernaut. So very well established over 200 DMA. This last, you can see now you can see the difference. Market came down December to March. Many sectors came down December to March. But what did this do? So December to March, it just went sideways. So this kind of relative performance tells you, what the sector is, the strength is versus the rest of the market. Most sectors have come down December to March along with the major indices, but FMCG has stayed flat. It tells you that as soon as market is ready to go up, this will be the first to go up, and that's what has happened in FMCG sector. Pharma is one sort of dark horse now, where after a very long time, it is even starting to come near the 200 DM. Otherwise, it has been in a doldrums. Like for instance, Sun Pharma has come back to its near its all time high after 8 years. Lupin is nowhere near it, and all those bigger, Dr. Reddy's, Cipla, Pharma has not really done well. But now it seems that Pharma has, started that long leg up again. uh, it does look like a very nice rounding cup and handle pattern is forming here. It is also above 200 DMA, so it could be a dark out. I still don't know if this will be a leader in various sectors going forward, but but this is something that one could look at in terms of some discretionary investing if in case you are doing. So just to sum this up, let's look at the April 23 sectoral performance. So PSU banks right up there along with real estate. So 19.7% on real estate, huge performance. PSU banking, huge performance, 16.8%. And then we have some autos, private banks, and you can see the difference between the PSU banking and the private banking. 16.8% gain versus 9.1% gain. Infra stocks running ahead, Nifty gaining 6.6%, metals doing all right. Pharma is just in line. IT is the only one, but that also has recovered from whatever damage happened intra month and closed at a 0.0% kind of a performance. This is a chart that we look at for a relative ranking of various sectors and sub segments of the market. So, top rank is 1, bottommost rank is 18. If we see over 12 months period, PSU banking has remained number 1. Over 9 months period banking has remained number 1. Over 6 months, number 2. Over 3 months, number 5, and over 1 month, number 2. So what this is telling you is that even if you don't want to get deeper into this, if you look at just the color coding, you will find that the worst sectors are have been blue and sort of pink and red all through, and the best sectors have been green and green shades of green all through. So banking in general, PSU banks, and public sector enterprise, I think this is one sector which a lot of people in the last decade have remained away from, given that there's government meddling into all these companies. But I think this year has proven that public sector enterprises, with their huge monopolistic resources that they have, and with better governance, with better independence to those companies, I think they are coming up very very rapidly as a contender for a top slot in the top sectors. And you can just see it in various stocks, whether it is NTPC, whether it is Power Grid, whether it is Bharat Electronics. And we've seen so many of these REC, So many of them, Hindustan Aeronautics, come into our strategies. So this is something that you need to constantly see. Real estate, which was not doing so well over the year, has suddenly come into action recently. Autos have come into action recently. uh, uh, and we also have financial services which have been very stable all through the year. So this kind of a ranking analysis can also give you some idea about how things are panning out, although you need to devise a strategy to fit on top of this if you want to trade it. So we are having a spotlight on two strategies this month. Uh, a lot of viewers and many of our subscribers also don't know about all these strategies. So we want to, every month have some spotlight on some strategies which are we think are worth your diversification into. So MI20, if in case you have not so far gone deeper into this, is a rotational strategy which is 20 stocks, and it only picks stocks from the mid and small cap 400 universe. So there is a mid and small cap universe which is essentially starts from the 101st sorry 151 to 500, or sorry 101st to 500 market caps, and it is essentially rebalanced every 6 months. So Nifty committee will meet every CNX committee meets every 6 months, and it will remove some stocks, bring in some new stocks. But this 400 stock universe is selected every 6 months and maintained. And this strategy basically, the only universe it will pick stocks from is this 400 universe. So mid and small cap universe, you can go see it on the NSE website also. And this allocates 5% or thereabouts to each stock, and on a weekly basis it is rebalanced. It may be one or two stocks maybe going in, coming out on an average. That's the kind of churn that happens. Broadly, if we study this particular strategy from 2016, it would have yielded you about 401% on total returns, with a CAGR well above 25%, max drawdown at 38.6%. And this would have been how the progression would have been. However, let's now look at how it has done since we have gone live with it, which is almost near 2 years. So in last 1 month, it has done quite well, uh, gaining about 15 or 18% actually. And I think we had a chart somewhere about, since we went live, this is not there, but we went live in July 21. So this is where we went live from, and since we have gone live, we are up about 30 odd percent since July 21, and the market has been totally flat since then. So that is something that has done really, really well over a period of time. And the reason is that, of course, in momentum investing, you are not held back by your own emotions as to the stocks that you're holding. One of the stocks, for instance, in this strategy is RVNL, and we all know very well how it has done in the last many weeks. We entered somewhere around 51 rupees in November 22 and are happily holding this. There is no rush to get out. As and when the stock tells us that it is being pushed aside by other stocks which have a higher ranking in the selection of the momentum, we will get out of this. Another strategy, very, very good strategy. I would say this is the undiscovered gem of weekend investing, where a purely small cap strategy which only invests in the constituents of small cap 250 index. So again, CNX committee selects 250 stocks for this universe, and this strategy selects 35 stocks, 35 small caps into this strategy, allocating just under 3% for each stock. Total returns again since 2016 would have been an amazing 444% with great CAGR, max drawdown, much lower than the market. And the beautiful part again is that since we went live in July 21, so again we are here, uh, we are up about 20 to 25% since there also, while the market has been totally flat. So this again is a clear example of how rotational strategies can do very well in whenever the market is turning, and picking stocks and remaining allocated all through while they're running. So this should have been MI35, it is MI20. I'm so sorry about that. Nasdaq is one of the stocks that it had entered at around 353, and the stock went up, it is corrected. So now you can see that this correction, although it is a steep correction, but because of the ranking criteria of this strategy, it has not got thrown out because it is still performing very well versus other stocks in the 250 index, and hence this gets retained till the time other stocks are able to prove themselves. And now it has started to go back up, and it's a great flagpole pattern, and I'm very hopeful that this stock will do very well on the going front. So these two strategies, I would want everybody to have at least one of them in your portfolio. These are very good strategies for the long term. You can use this code WIAPR23 to get a flat 20% discount on these two strategies. This is valid for today and tomorrow only. So I think I have come to an end to my presentation. Let me go and see if we have queries on this. Let me just go back to the comment section.
Yeah, hi folks. You can post all your queries on the comment section. We will take all your questions one by one from the top.
So Hunter is saying this market is making me postpone my purchases. So I think while timing the market is important, but our thesis on this is that most people are unable to time the market, including myself, and hence we have devised all these methodologies to stay invested in the market and remain invested till the market itself makes you invest in the market. So let's say you were within any of these two strategies, for instance, in the last year. So while you are waiting for the market to take off, it is automatically also edging you upwards as you are sipping into it. It is creating that already a slight alpha generation is already happening with the best performing stocks, while the market is making a base to take off from. And once it takes off, and I can tell you that it is not really in that takeoff mode yet, but it is almost there, nobody will be able to buy easily. So if you are not able to buy in this period when it is consolidating, you will never be able to buy when it goes up. So my suggestion would be, don't try to time the market so much. Yes, make a maybe a two piles of your investable cash, and use one to keep sipping into the market and gradually deploying it, and one as a lump sum, some part of it, where if you find that a opportunity, short term opportunity has come because of some external reason, market has gone down 15% in 2 weeks and then it is going to bounce off, you may deploy it there. So that is something that you could look at doing that. Ganesh says, post subscription, how small case services are executed? Please explain. So, very, very good question actually. A lot of people still don't understand how small cases work. So, small case is nothing but a platform that is linking or integrating your broker account at one end and a research company like ours at the other end. So, what you're doing is you are coming onto the platform, you are taking our research, and the platform will help you execute that research in your own portfolio. So we have no access to your portfolio, we cannot do anything in your account. Small case also cannot do anything in your account. They cannot execute on your behalf. Only when you will say that I want to rebalance or I want to execute this transaction, will those orders go into your account and your account gets transacted into. So essentially, just to simplify, We will give you a portfolio with weights. These are the 20 stocks, these are the weights. And when you will say, okay, I want to allocate 5 lakh rupees, I press go, those weights will be allocated to you in your own demat account, brokerage account. And we, after every week or after every month, as per the product may be, you will get a notification from small case in the app or in the email or on WhatsApp also, that you need to go to your account and update your account or rebalance your account. So there, a few stocks may go out, a few stocks may come in, and you need to continuously do this to maintain your account going forth. And that's all you need to do. You will get all the statistics, all the benchmarks, all the accounting in the small case environment. And we, as providers of that research, are also available to give you any hand holding or give you any support on email whenever you like. So this is the way how small cases work. Let me look at more questions which can be beneficial to everybody. So Mohan says, I have all cap and ATH. Do you recommend MI 20 and 35 and split money, both all cap and ATH to this? Is MI 25, 30 better than ATH and all cap? So while better or not is not the way to see it, I think diversification is the way to see it. So if you are in all cap and ATH, you have very little exposure towards small caps. So maybe one of these two, MI 20 or MI 35, could be something that you could look at to get that focused small cap exposure in your investment. So this is something that you could look at. Okay, Captain Vittel says, why have you stopped giving the daily performance of various strategies in Daily Bite? So there have been a recent SEBI guideline which says that you should not be broadcasting your performance in advertising. So it is very unclear so far what exactly is the guideline. So we, as a precautionary step, have stopped giving the updates on our strategies. But if whenever this is clarified as to what exactly do they mean, we will start it again. But nevertheless, you can go to the Weekend Investing Hub where all this data is available. You can go to the weekendinvesting.com website where all this data is available. You can go to small case weekendinvesting.smallcase.com where all this data is available. Good question from Nilabja. MI 35 and MI 20, lot of stocks must be overlapping in nature. Can you please clarify on this? So that universe the two has, MI 20 is small cap and mid cap 400, and MI 35 is only small caps. So it has a overlapping universe of the small cap segment. So to that extent, I would assume that almost 50% or somewhere around that may be an overlap between the two strategies. So it would be really good if you select one of these two strategies at least to go with. And then if you feel that you want more of mid cap exposure to your mix, then you could go for both as well. There are some questions on specific stocks, so I will not be able to take those questions. Bala Krishna says, whenever Nifty has consolidated for 2-3 years, the next leg has been 50% from previous peak. Can we expect the same this time? So your observation is very right. That and if I go back to the main Nifty chart that I showed you in the beginning, you can see here that every time Nifty consolidates, so we had this huge run up of almost 4x, and we had 2-3 years 4 years of consolidation, then a huge run up here, then 3 years of consolidation, then a huge run up here, 1 year of consolidation, then a huge run up here, 1 year of consolidation, then a good run up here, 2 years of consolidation, and then we've had 3-4 years up, and then 2 years of consolidation. So it is very likely that we will have huge gains in the next couple of years. And also on this point, I want to mention is that election years, at least in the last many decades, have been huge plus years. So if you look at 2014, if you look at 2019, if you look at 2009, if you look at 2004, these have been good years. You can see that you know this election mode will likely start, becoming a centerpiece in the narrative probably by last quarter of this year. And by that time, my guess is that all this recessionary talk in the Western world, either a recession would have happened, and the Fed starts to cut heavily, and nip the recession in the bud by the end of this year, or we don't get into that recessionary mode at all. So I think next 2 quarters are going to be crucial. I don't expect markets to run off from here till next May, but I think we may go towards 80,800 and you know simmer around for a quarter or two, or we may wait somewhere around here only for a quarter or so and then make that move up. So I think we are in that crucial 6 to 9 month period before a huge move up comes around. And that is very much possible because as soon as electoral math starts to become clear in opinion polls and all those things by the end of the year, you will start seeing that kind of a fillip come into the market that we saw before 2014, or even below before 2009 election, or and even before 2019 election. So next question is good question from Weber. I've taken MI25. Rather, should I go to MI20? So again, I would say I will not pitch one against the other that this is better or that is better. But MI20 has had a great run in the last 7 years. It has been live for since 2016, much before small case even came into the picture, and it has a great history behind it. MI20, of course, being a rotational strategy, has done very well in the initial part of the run up. But if this run has to happen for the next 2 years, I'm sure MI25 will also catch up. So you could look at MI20 in addition to MI25 if you want to diversify within the small case space itself. But there will be some overlap that is there, and if you drop us an email, we will tell you the current overlap that is there between the two strategies. Sagar says, what could be the next levels Nifty reach by 2024? I wish I had that crystal ball, but I think markets can surprise everybody at most times. That is something that, if you look at the last few decades, at no point were you able to guess that this kind of move would have come from 2003 to 2008. I remember very clearly, if I just take a minute to go through in my own experience, after this move in 99 2000, where all of us were making a lot of money in the IT stocks, a crushing move came from 2000 to 2003, where a significant damage happened to the portfolios in IT especially, and all other sectors just went flat and dead. So 2001, 2002, and part of 2003 were as dead as possible. I mean, nowhere near the deadness that what you're seeing here. I mean, it was down and dead. And I remember I was running a stock brokerage house at that time, and there was no client to deal with in those days, and we used to sit idle for months together. I started a BPO business on the side just to keep my bills running, and it really became a situation where everybody was giving up on the markets, that this cannot be the industry or the place where we want to be at. And just see what happened after that. Within 4 or 5 years, 2003 rally started, and we went up from nearly 1000 Nifty to 6000 Nifty, 6x gains in the next 4 or 5 years. And you can imagine, if Nifty made 6x gains, stocks made 20x gains, many of them 25x gains. And those who lived through this rally can, you know, tell you very, very honestly that there has not been a rally like this since either the Arshad Mehta period, which happened here, or this COVID rally that we saw here from there. So whenever the markets are in consolidation, it is essentially brewing, and it is hibernating to go into the next phase. Uh, my friend, I don't look at valuations, but my friends who do look at valuations tell me that we are very near historical long term average valuations for the market. So that itself also bodes very well for the markets to form a base. And I have no doubt that, once these headwinds of global recessions are beyond us, India will take that lead and go forth in our markets. So Webab has another question. How should we diversify within weekend investing strategies? So I think how you can approach this is that you should look at the sub segments each strategy is catering to. So, maybe you are looking at MI Evergreen, which is only CNX 200 along with gold hedge. This is one part. Then you could look at, mid and small caps, or you could look at specified way of approaching the market, maybe, like a MIATH or MIATH2, which is chasing all-time highs across any segment. Or you could look at only Nifty stocks, so, wanting to get strength out of Nifty, so you could look at India top 10 as one of them, or Nifty next 50 only, you could look at NNF 10. So there are various these pockets that you could diversify across, and diversify across the markets in your portfolio. So one good question is from Subham. What is the rationale behind MI20 having recommended capital of 10 lakhs? So what we have noticed is that some of the large investors who ideally should be going towards PMS or AIFs, because they have very large capital, when they see very good performance in small cases, they jump into these small cases and deploy, crores of rupees into these small cases, crowding out the retail investors for which these small cases were built for initially. And that is the reason why we recommend that don't come beyond this limit, because we are also watching what kind of AUM is chasing each particular strategy. And beyond a certain AUM, we don't want a larger AUM to come into that strategy and distort the price discovery for all other users. So for instance, somebody, if he throws in 50 crores at MI20, and there's a rebalance, and each stock needs to have maybe 2.5 crores of a rebalance, buy or sell on a Monday morning, that will distort the prices for some time, and everybody else also gets disturbed in that. So that is the reason we want to limit what kind of AUM comes to each strategy. And in the past, whenever we have found that too much money has come into any strategy, we have closed the membership of that strategy and requested those people also to reduce their allocation and diversify it across it. So it is for the well-being of the entire ecosystem that we don't go overboard in terms of what comes into any one strategy. And also it is a great diversification for the user itself. Why would you want to keep all your eggs in one strategy? That is not a very good strategy to start with also. Rakesh has a question. What is your take on concentration to a particular sector? As my IT holdings of IT and PSU banking sector is almost 20% of my portfolio. So I think if you are having a 10% allocation to a sector, that is not really concentrated in my view. From that perspective, you could very well continue. But I'm probably not the right person to advise on this. A good financial planner or advisor will be a person who can do this for you.
Alok, so
Gaurav,
many
yeah.
many many people have written some questions on the execution process, how simple it is. Some people who might be new to the platform may have some questions on whether it's going to be cumbersome for them to execute or not. So can you please share some insights on how quickly you can do
So I
this?
think I think the whole idea about small case is to simplify execution. So imagine if you have a portfolio of 20 30 stocks, and now you have to rebalance three stocks. So three stocks have to be sold, three stocks have to be bought. The ones that have been sold will generate some capital. Now you have to allocate that capital to the three new stocks. So you will have to calculate how much to buy as per the moving price for each stock, and then you'll have to maintain a spreadsheet where you have the allocations and the performance of your strategy, what is the total capital required, and new stocks get automatically bought in, and old stocks get automatically sold, and new stocks get automatically bought in. On all the accounting is in place. The platform will show you what is your long term XIRR, what is your dividends that you are receiving on these stocks. It will notify you that a rebalance is pending, you should rebalance now. The support is available through small case as well as through weekend investing support. So it is very very easy to maintain your portfolio, and all our strategies are either weekly or monthly rebalances. So you only need ideally 2 minutes or maybe even less than that per week or per month, and that's all that you need to do for maintaining this portfolio. You can download reports from the platform. Also your broker will be able to give you tax reports and all those things. So I think it is all very very simplified, and that is the whole purpose of this ecosystem coming in place, to give that ease of operation. And essentially it, because PMS has been taken out of the retail investors reach. Minimum is 50 lakhs of investment in a PMS. So what was happening was that a retail investor did not have access to a professional manager. Of course they could do it through mutual funds, but there was no access. You cannot talk to a mutual fund manager. Here the small case manager is available to you. They are giving you direct support. You can ask queries from them. You can have a portfolio which is 5 lakhs, 10 lakhs, much lower than the PMS limit, and still have that professional manager give you that research that is available only to high net worth folks earlier. So that is the whole reason for this ecosystem to come around, and for this small case platform to be there. Gaurav says, any new strategies planned in the near future? So we don't have any public announcement to make on this, but as and when a strategy will be ready to be launched, we will let you know. Uh, is it possible to have momentum strategy for different indices? For example, a strategy which selects one or two top index ETFs from Nifty, Nifty Next 50, mid caps. It is possible, but currently we feel that selecting stocks from an index makes more sense. A lot of times, also many of these ETFs are not liquid enough to support very large transactions. So if you look at Nifty Bs, and you want to sell 50 lakhs, let's say 100 users want to sell 5 lakhs each, and you have a 5 crore order Monday morning, it will have a huge sort of impact cost on the portfolio. So there are some practical problems that exist with ETFs, especially the mid cap ones and the Nifty Next 50 ones. So for a better perspective, therefore, is that when we select the strength of strong stocks from these indices and create strategies around that, like India Top 10 or Nifty NNF 10 on that matter. So I have another minute to go. I'm trying to select a question which can help most of you. Rudra says, I have all cap and ATH2. Does MI35 worth adding? Yes, please add. It's a very good strategy to add to this combination. Overlap will not be high. Overlap will not be high on this. Uh, Gaurav says, can you explain on daily buy total return versus current return? So we have some videos and explainers on this. So if you can just drop us a mail We'll clarify all this to you. This is all automated, available on FAQs and on the support section in the weekendinvesting.com site also. Any plans to automate stairs investing via platforms? So no plans to automate, but that strategy has been reforming and restructuring, and it is doing well in the past. So once we have more data to present to you, we will come back and present the stairs data to you. Subham says, I have NNF10 and MI20. NNF10 is monthly rebalance. What I'm planning is to pledge the holdings and use the margin in your trading setup. So I do not recommend pledge and trade. Please trade with the stocks that you are not going to touch for some time, because rebalances could happen, and if your pledge stock is stuck there, then you'll have some issues. But if you are good at doing this, then possibly you could look at that. One last question I'm taking is from Ramesh. If somebody has strategy involving booking 5% profit with 60% strike rate, do you think this will be a better strategy? So I don't think this is complete information, because you're booking 5% profit, but what is your average loss that you book with the 40% losses? That will be required to assess this strategy. Does all cap strategies have any mandatory allocation? So no, Sumit, we don't have mandatory allocation. Uh, we do have limits of what is the minimum market cap for each segment, but and also the minimum volume traded in the markets, and the rupee traded rupee volume traded in the markets as a minimum for many of the strategies. And hence, whenever the markets are in a sort of a sideways compression of volumes in the mid and small cap events in segments become so much that we are unable to pick stocks from that segment. And as the market will pick up, we will find that more and more stocks come from that segment for that reason. So I think I've come to an end to my time today. I still had some questions remaining. Please do send your queries to support@weekendinvesting.com. Use code WIAPR23 to use MI20 and or MI35 for today or tomorrow only. And I hope that I will see you again at the monthly meet next month, and wish you all the best, and best of month of May to you. Thank you. Bye.
Hi, look, we can end the live session.